Hello. Over the last 3 years, I have learned some of the most amazing stuff related to investing in private notes and making money investing in mortgages. And today I'm going to show you how you can earn 15% or more investing in something that has 2-to-1 collateral, which means that if there's a problem, you have almost double the assets backing up your investment. It's better than almost anything you can do. Today we're going to be showing you how Lendtuit's biggest investors have been making as much as 25% return on their money over the last couple years, and we'll be showing you a special offer for how you can do it too if it's something that you want to do. And who wouldn't? If you're going to investing somewhere, you probably want to be earning more money rather than less. Today we're going to talk about 4 things. What is mortgage investing? Some people call it trust deed investing. We'll talk about why it's the best investment, from my opinion, that you can get into. We'll talk about why you would want to do it with Lendtuit, and specifically why you want to do it right now, and that's where we have a special offer for you. And we'll get into how you can get started. If this is something new for you, we'll show you how you can do it with us or how you can learn more about it. If you have questions or comments, don't be afraid to let us know. I'd love to answer them while we're going through this. All right. What is mortgage investing? Now, every time a loan is made to somebody, that is an investment. Normally you think of it from a bank. The bank is investing in the borrowers. They're giving the borrower money, hoping that the borrower pays it back. And what the bank gets in return is the interest, right? So a $100,000 investment, banks do this all day long, 4, 5, 6% interest. They receive that interest over time. At the end, the person refinances the mortgage or sells the house, and they get the principal back. That is a mortgage. In its most basic form, a mortgage is a contract between 2 parties. And the good thing about a mortgage, as opposed to a regular contract, is that it's backed by real estate. If one party defaults on the contract, defaults on their obligation to make regular payments, the other party has the right to go to court and take the real estate away from them and sell it to recover their losses. When I first got into mortgage investing, I looked at the laws around mortgages, and I really thought that they were designed to protect the borrowers, right? Consumer protections, these are good things. It protects people. But what I've seen over the last few years is that it equally protects the investor. In a normal contract, if you have to go to court and fight over it, it could take years and hundreds of thousands of dollars very easily. The great thing about the laws behind mortgage investing is designed to make the process of a foreclosure or a default standardized, quick, and inexpensive. So again, while I originally thought it was to protect the borrower, it really is to protect all parties involved, and it makes it a better investment, better than any other kind of loan where you have to go to court and fight for your rights. So mortgage investing is people who buy mortgage notes or trust deeds, and that's what we issue. When someone gets a mortgage loan from us, we give them money, and in return we get a mortgage note or a trust deed on their property. And like I said, we earn interest. But do we really earn the interest? No. The reality is our investors who come to us earn the interest. So we issue mortgages, and the investors get the return. And we, being a broker or lender, we're the pass-through. We're the ones that facilitate all of it. So normally when you think of investing, you think of stocks and bonds or other kinds of things. This has significant advantages over the other types of investments. Very quickly, I'm going to compare mortgage investing with stocks, mortgage investing with bonds, mortgage investing with annuities, and mortgage investing with just going out and buying real estate on your own. There's differences. Not all of them. It's not 100% better in every way. Each one has its advantages, but I'll go through that quickly and explain those. First of all, stocks. The way most investing works is when you invest in something, you buy it. You buy it and you hope that the value of that thing goes up over time, but it could go down over time. So if you buy a stock at $100 per share, you want that value of the stock to go up to $110 a share. You just made a 10% return on your money. And with stocks, that's a pretty decent return. But the reality from what you're hearing is that stock return is volatile. It's always going to be volatile. You might have bought it when it was too high, and the price can go down immediately thereafter. The good thing about investing in a mortgage note is you have a fixed contract and you know what your return is going to be. If you have a mortgage note at 15% interest, you're going to be earning 15%. That is the contract. And if somebody defaults on that, they have to pay a higher default interest rate. So you're going to end up earning more, and you might even end up getting the property back where you could earn even more. So stocks are volatile, mortgage notes are consistent, and when you invest correctly, like we do, you can get a 15% return on the investment. So stocks can go up 20% or down 20%. If you're in the stock market, you know this. Stocks are volatile. The last few years have been very good, but you don't have to look back very far to see when it has been bad. So there's a lot of risk with stocks you don't necessarily have with mortgage notes. That's not to say there's no risk at all with a mortgage note, but it is contained. And if we're doing our underwriting correctly, there should be very little risk, because if it's a $100,000 loan, there should be a $200,000 property that's collateralizing it. So, stock market, I know anybody can go out and get an E-Trade account and trade their own stocks, but you are battling against giants. You're literally battling against companies that have invested hundreds of millions of dollars in technology designed to beat you at every turn. They're competing with each other. It's very difficult to know something the other guys don't know and make it an advantage. The way to make money, any kind of investing, is by knowing something that other people don't know. If you've never heard of mortgage investing before, then that's why other people are making so much money on it, because there's a lot of people doing it, been doing it for a long time, but it's still an open market for it. So with mortgage notes, there's an active market for investors. It's not necessarily dominated by big players who are going to steal your shirt. All right. So that's mortgage investing versus stocks. Let's talk about bonds. Bonds are very consistent. The problem with their consistent return is it's consistently low and not super exciting. I have on the thing here that you can earn 2 to 4%. I think it's really ranges maybe more 2 to 5 or 6% depending on the bond that you're in. And you can invest in junk bonds, but those are super risky where you can lose everything. The collateral on a bond is not the same. So in general, bonds are very consistent, but the returns are very poor when compared to what you can get with a mortgage note. If the bond defaults, you pretty much lose out. In a mortgage note, if the borrower defaults, you have that collateral behind you. You may go through a process. There might be a time period where you're not receiving interest payments, but you potentially end up making more money after it goes to auction or when they refinance you out with another lender. Again, bonds, as much as stocks, are dominated by big players who are very good at taking all your money. Mortgage notes, most of the big players are in the conforming Dodd-Frank, they want the federally backed loans that have a much lower interest rate than what we like. They go for maximum ultra security backed by the government, but they sacrifice almost 80% of the mortgage return. So in our market, there's a strong, heavy market for note buyers. Note investing versus annuities. In annuities, it's consistent. You're going to consistently earn even less money than bonds. Now, fortunately, you have absolutely no risk of default. I believe they're more or less guaranteed, but you never get your money back. Once you buy an annuity, the money is basically, there's a million different kinds of annuities, so I would be careful about making a blanket statement about annuities. But in general, once you put your money in, you're never getting it back. You're just getting those return payments. With mortgage notes, it's a much shorter time commitment, right? You're getting a much higher return than annuities, 15% or more potentially. If there's a default, there's no risk of default with annuities. There is a risk of default with mortgages. Often that ends up being a good thing for you. But after a couple years, if you want out, you could sell off your notes or wait for your people to refinance, and then you get your money out and you can go do something else. So it's a much shorter time commitment. Finally, mortgage notes. Buying mortgage notes is kind of like investing in real estate because you are investing based on the real estate that's there. So let's compare it with just going out and buying homes. If you go out and buy a house, just like stocks, you're hoping the value of the house goes up. It could go down. Very reasonably could go down if the neighborhood changes or there's some large flood that affects the area, or just the dynamics. Maybe wealthier borrowers move out and the whole market changes, right? Your house or property can lose value. Let's say you have a tenant that damages it, you can lose value. So you don't know what the return is going to be. You're going to invest a big chunk of money, hope it goes up, hope you get a renter. Maybe you get a bad renter in there, you don't get paid for a long time. It could put you in a very tough situation. With mortgage notes, you know exactly what the return's going to be. And like I said, if you don't get paid for a while, then you get a balloon payment at the end. If a tenant stops paying you, it's good luck getting your money back. You're going to have to go to court. I don't know what you're going to get, right? Also, investing in real estate, you have to deal with toilets and tenants, right? You got to go out and fix toilets or have a property manager company, and you're calling people asking for their rent. You're doing it all yourself, or you're paying somebody else to do it for you. You can be real expensive, and you can lose a lot of the profit or benefit that you have. A lot of people are very interested in fix and flip financing, where you purchase property for a short period of time, fix it up, and sell it. I've seen people that are good at fix and flip that are only making a 10% annualized return because you can get stuck in properties that take a long time. The holding cost of the property can really stretch out, and you don't have that consistent return where you know you're going to get. Plus, it's just a lot of work. Buying real estate, fixing it up, managing it, it's a lot of work. With mortgage note investing, there's no work at all. You buy the note, you sit back. We have a servicing company that handles the servicing for you. You pretty much don't have to do anything. There's a chance that maybe it goes to court. You'll have a lawyer that represents you. You don't even have to go to court. So, real estate investing can have the same returns as mortgage note investing. It can have more if you're a really good investor, but there's a lot of risk that you could have less, and it's a ton of work. So between the four, my personal favorite, especially having done this for a while, is mortgage note investing. The returns are better than you're going to get almost anywhere else, and they're more consistent and stable. Now, when I first got into this a few years ago, I was concerned. I remember the 2008 mortgage market collapse when a bunch of people lost a lot of money in real estate, and I was thinking, man, what happens if that happens again? You can lose your shirt. So let's talk about a worst case scenario with mortgage note investing. Let's say the economy is hit, something horrible happens like in 2008, and the whole market drops 50%. The price of real estate, the value of real estate drops 50%. That would be an apocalyptic scenario. That's actually worse than what happened in 2008. But let's just say the market, real estate, and everything drops 50%. Well, if you're invested in stocks, your stocks probably drop more than 50%. You probably got completely wiped on your stock investments. So with the mortgage, even if the property dropped 50%, if we're doing a 50% loan to value, you still have 100% collateral on your loan. So even in what would be a really, really bad scenario, you're still 100% collateralized. Now, bonds would suffer. I think your annuity would be okay. If you had an annuity, you wouldn't lose any money. But out of all of those, the best situation is to have a mortgage note where you still own the return. Maybe you end up taking a property back at the bottom of the market, and now you can wait a little bit and sell it when the market goes back up. Because if we've seen anything over the years, markets go up and down. If you invest in a note, the payments are consistent, and if you have to take it back, then you can sell it at the peak of the market if you want. All right, so if you have ever thought about doing mortgage note investing, right now is a great time to do it with Lendtuit. That's us. We have so many deals coming in right now that we're looking to expand our investor base. We have a couple of really big investors that have been funding our deals for years, and that's great, and they're happy. But we'd like to work with more people in order to make sure we can fund as many deals as possible. So we've been originating private loans for the last 3 years. We've done over 35 million in originations in that time. We go out and create the loans. If you're on the loan origination side, you know there's a lot of work that goes into that. We manage all that for you. We bring the loan to you. We even have a servicing company that handles the monthly payments and contacting people about missed payments and all that stuff. They send out all the statements, everything at the end of the year. They do basically all the work for you. All you have to do is invest and watch the payments come in and respond to requests every once in a while, even though those we generally help you with. And we have many loans available right now that you could invest in. If it's something that you're interested in doing at some point, right now is the time to get into it because we're offering a special offer to new investors. And I'm not going to get super specific because it does vary based on the deal, but for the first time ever, we're offering you as an investor to earn origination points on the loan. So an origination point would be, for example, a $100,000 investment. You could potentially buy that for less than $100,000. So 1% discount on a $100,000 investment means you can buy a $100,000 investment for $99,000. That means the moment you buy it, you already earned your first $1,000. A 1% discount actually boosts your first year return by 1.15%, so it's even a greater return. If you got a 2% discount, which we have offered before, that's a 2.3% boost on your first year return. And for some special deals, we'll offer as much as a 4% discount. That means you could purchase a $100,000 mortgage for just $96,000. That means it's a $96,000 investment. At the end of the year, you're going to get interest on a $100,000 loan for the year, and then you get $100,000 back plus the interest. So I broke it down for you so you see exactly what that would look like with that special 4% discount. We're not always going to be offering this. In fact, not everybody's going to get this anyway, but this is just an example so you understand how it works. Say it's a $100,000 mortgage at 13.95% interest rate, which is a very common rate for us, and you get it at a 4% discount. Your investment would be $96,000. Each month, you would earn the full interest rate, $1,162.50, which is a great return. At the end of the year, their last of the 12 payments, the borrower owes $101,625. So that's your 14% interest for 13.95% interest. And the total you get over the full year is $113,950 off a $96,000 investment. That's an 18.7% return. You can compare that with just about any investment out there, barring getting lucky on one particular stock that shoots up in value. Barring that, and that takes a lot of luck to make that happen. Forgetting about that, this is pretty much one of the best investments you're ever going to see. This $100,000 loan would probably be on a house worth $180,000 to $200,000. So you have almost 2-to-1 collateral. That thing goes to auction. It could auction off at $140,000, $150,000 very easily. You're going to get all your money back plus penalties. Or let's say something weird happens and you end up getting that house back. You put in a $96,000 investment. Now you own a house that's somewhere worth around $200,000. Even if you go sell it for $150,000, now you just got a 50-60% return on your money for the year. So the return can be very good. And right now, we are offering this to people who want to get in and invest. Now, if you're watching this and you're thinking, I don't have $100,000, we can split up a note to be owned by multiple people. Probably the minimum investment we're going to accept right now is someone who has at least $25,000 to invest. If it's less than that, we don't want to put 10 people into one note. That's a lot of people to manage for statements and updates. But the opportunity is there if it's something you want to do. So if you are interested in looking at the notes, I have 7 deals right now that you could invest in. And I'd put them online, but there's privacy issues with the borrowers. So we need to do some vetting and make sure we're working with real people. What you can do is go right now to notes.lendtuit.com. You're going to put in your information. You're going to talk to me personally. You'll need to show us a proof of funds that shows that you have at least $25,000 available to invest. That could be a stock and bond portfolio. The money could be in a 401k. The money could be in an IRA. The money can be anywhere. We really don't care what it is. We're not picky. Whatever it is, once you get that in, then we'll show you the deals that you can purchase right now and show you if you're able to pick them up at an investor discount, which is a great way to get in. It's something we're offering, particularly for first-time investors, people just getting into this. This is what the page looks like that you go to. This is at notes.lendtuit.com. It's very simple. Just put in your first name, last name, email, phone, and I'll give you a call and we'll see if this is going to be a fit. And if it's a fit, that's great. You can invest in a note. The borrower pays off the note. You can invest in another one. If you invest in a note and you decide 6 months later, hey, you know what? I got something else I want to do with the money, you can come back to us. We can offer it to our other investors. So you're really not stuck in it. And right? You just invest, you get your return, you get your monthly payments, and that's it. I can tell you I have personally invested in multiple notes. I did a show on this a while back, or a note that I invested in and then I watched it go through the entire life cycle. I'm personally invested in other notes right now. I'm offering these things to my family. I could say that my sister has been note investing for 10 years, way before I got into this. In fact, that's part of the reason that I got into this is she had been doing it. And when she first told me about it, I was like, wow, that's pretty amazing investments, and she'd be getting 8.5% to 9%. She got into it because her in-laws have been doing it for 25 years. So this has been around forever. This is nothing new. What's new is you may not know about it, or you may not have heard about it before, and right now you have an opportunity to get in with a lender who's willing to give you the full rate that we're giving to our big investors, because we want you to be able to fund the deals right at escrow, own the note right away, own the whole note, and make the return. We're happy finding the deals and bringing them in and earning money when we actually create the loan. So if it's something you're interested in doing, I'd love to hear from you. Put in your information and I will call you personally. I see we got one question coming in here. Daryl is saying, really want to submit deals, but I'm having trouble getting through to somebody. Well, we'll reach out to you. The reality is, and part of the reason we're doing this show right now, is that we have a lot of deals coming in. So many deals that our regular investors have been investing with us for a while are saying, man, this is really growing quicker than we were expecting. We need more investors, and because of that, we're offering something special we've never offered before. So if you're looking to invest, if you'd be happy making a 15% return on something backed 2-to-1 by collateral, this is the time and the way to do it, and we look forward to talking to you. I don't see any other questions, so all right, see here, we got Rick is asking, where are the properties generally located? Great question. If you watched any of our shows before, you would know that we are nationwide. So right now, I'm just thinking off the top of my head, I got 7 different opportunities. We have a couple, we have 2 borrowers that have 2 different properties, 2 in Alabama, 2 hotels in Alabama we're looking at. We have a commercial and a really massive residential property in Indianapolis that we're looking at. We have a couple deals in New Jersey. Strangely, we got these 2 first. I'm trying to think off the top of my head. We have something in Kansas. We got 7 different deals. So the smallest deal is an $85,000 note on a single family residence in New Jersey. The largest one, we have one coming in right now. It's a $3 million loan on a commercial building worth $6 million. And strangely, the guy, this is just an interesting story. The guy went and bought this and got a 1-month loan from somebody. What the heck is that? I've never heard of a 1-month loan. He got a 1-month loan, and now he needs somebody to refinance the note. So that's kind of a range. $85,000 is probably the smallest loan. $3 million is probably the biggest we would try to do this way. But you can look at it and see there's lots of single-family residents. We have an assisted living or a senior living facility that's available. We have a condo in the Bronx that's available right now. We have a lot of different notes, and they're going to come with different discounts or availabilities. Now, we always give preference to someone who would purchase the entire note. I'll be honest, just easier for us. But in the absence of having someone who wants to invest and purchase the whole note, we could break it up. Probably the max investors we'd have on one particular note would be 4. I think beyond 4, it starts to get a little unreasonable. All right, that's it. I don't see any other questions. Darren, I don't know if you have any questions. You heard us talking about it a lot. Darren helped us put the page together, and he's been behind the scenes watching us put this together for years now, really. My plan had been to roll this out in a few months, but we have so many deals right now that I wanted to get it out there and make it available for people right away, because it's a great time to jump in.
Yeah, I mean, Tim's right. We actually have a stack. We have hard copies of all the files. We have a stack that's just ready to go.
Big stack.
Yeah.
All right. Well, that's it.
I mean, it's a great opportunity for people.
If you know people that would like to invest, it's not a fit for you, feel free to refer them to us. We appreciate the referrals. And it helps us get your deals done. So if you're submitting deals to us, send over the investors as well. We'll handle them, take just as good care as I take over my own money and my sister's money, right? So we take this very seriously, and we look forward to talking to you and seeing if we can do some business together. Thanks for coming on, and that's it. Have a great one.